Fair value gaps are telling you a story, and it's up to you to understand the story. So allow me to explain what the fair value gaps are trying to tell you. When you do understand the story that the fair value gaps are trying to tell you, you can get to a draw on liquidity way easier. You will understand certain characteristics of price, and in general, it will make your trading much easier to understand. In the previous episode, we already touched on it briefly. That episode is in perfect harmony with this episode. So to define the things that I want to go over a sweep versus a run. A sweep of liquidity is when price takes liquidity and then moves to the opposite liquidity. A run on liquidity, for example, a run on liquidity is when we have buy stops right here and price just keeps on going. That is a run on liquidity. A sweep on liquidity is where this happens. If we have buy stops right there, then we have a sweep like that. That story and the differentiator, what happens between a sweep and a run, can be told by fair value gaps alone. And also, if you do remember the episode when we touch on overlapping PD rates, I told you there's a certain situation in price when that doesn't always happen. And when I would prefer only a sting into a fair value gap instead of coming into that overlapping PD rate. So that is exactly what we're going to touch on. Now, let's start off with a sweep. Whenever we are sweeping liquidity, the fair value gaps that were being created pushing into that sweep, they will get disrespected and we will form an ST model. That's as simple as it is. So you can notice a certain characteristic. Of course, the context behind everything is important. Although the fair value gaps on its own already give you a lot of context, that is exactly why I love to work with fair value gaps. So right here, we have a daily premium array that was selected on the weekly forecast as well. Then once we have a move into that, can you see what is happening right there? That bullish fair value gap right there, that was responsible for coming into that premium array. Can you see what is happening there? Now, based on the previous episode, we have a beautiful ST right there. But the story behind that ST is also that we are disrespecting a bullish fair value gap on the other side. That is the main characteristic of sweeping instead of a run on liquidity. Whenever we sweep and we immediately rebalance a fair value gap completely, that is not what you would want to see if you're expecting a run on liquidity. If you're expecting a sweep, then that's perfect. So when I do refer to a run on liquidity, can you notice the difference between this price action and the price action we just saw? Whenever we went above this high right there, how can we know if we were sweeping that high? Or is it a run on liquidity? A run on liquidity has a high probability of respecting a fair value gap that is overlapping with the high or the low that it just swept. And with respect, I mean that it continues higher off of that fair value gap overlapping with the high or low that it just swept. And we sort of have a small staircase higher. We stumble higher. Right there. Can you see that we are stumbling higher? Now, what was the main premise again behind ST? The main premise was that an ST has volatility. So there is likely huge orders behind that move because it's leaving behind inefficiencies. That can be said as well here. If we are truly sweeping a high, we are not staying above it for a very long time. And if price is stumbling higher right there, it's not moving higher fast, it is slowly continuing higher. And we are respecting that first fair value gap there, overlapping with that high. Then this retracement can already be seen as just a retracement and not a sweep. So to define the characteristics of a sweep versus a sweep is when we have the ST model. So we would have disrespected that bullish fair value gap immediately after coming above that high. And we would have seen an ST model to the downside. And a run on liquidity is when we respect that fair value gap with the overlapping high. And we immediately reject higher off of that. Then we can already know when this retracement happens. That is where we can look to ride the expansion higher again. So we know prices are still bullish. Whereas if we go back towards that sweep, once this happens, we know that price is targeting opposing liquidity. What is opposing liquidity? Opposing liquidity are these equal lows right there. When we have a sweep, so we have that ST model formed, price will target opposing liquidity, buy side liquidity to now sell side liquidity. So if we take a look at this example on, again, EU, after sweeping that low right there. Can you see what happens? The fair value gaps are telling you a story right there, and the fair value gaps are trying to tell you that this indeed is a sweep and not a run on liquidity. Because if it was a run, then somewhere these fair value gaps or those fair value gaps would have been respected and we would have seen a continuation lower immediately. And then afterwards, we might have seen a bigger retracement. But right here, this is already your indication that we are now targeting opposing liquidity in the form of these highs and even higher and even that high and even that high. Constantly, when we are running highs, what is happening? We have those highs that are getting taken. Afterwards, what happens right there? Even those equal highs right there, we respect the first fair value gap right there, and we continue higher off of that. Now, of course, the whole context behind that is also very important. After this sweep right there of a previous week low into a weekly fair value gap, that is your weekly target all the way up there. And can you see how fractal this is? Can you see what we just talked about on a 15-minute time frame? Here on the 4-hour, what are we seeing? After sweeping that low that we just talked about 15 minutes, that 15 minute is an early indication. Now, right here, we have our ST, and right there, we have an immediate retracement into that fair value gap. And we are slowly climbing higher right there. And that right there is your ST entry. After taking those highs, we are coming into that fair value gap, and we are not coming into an overlapping PD array. We are only coming into that fair value gap, and we are continuing higher. Then right here, we are taking that high. Again, if it's a run, then we will respect that high and that fair value gap that is overlapping with the high that we just took. If we saw an ST lower and we were disrespecting that high, then we would have likely targeted opposing liquidity in the form of those equal lows right there. So that leads me to the next point. When we are expecting a retracement, I am not always expecting price to come all the way back into an overlapping PD array. And let me tell you why. Whenever price is close to the drawn liquidity, so what do I mean with close to the drawn liquidity? We already had our ST model right there. We are continuing higher, and we are now relatively close to that drawn liquidity and that ultimate drawn liquidity. I would not expect price to retrace all the way back down towards an overlapping discount rate to continue higher. And that is, again, based on the same story that the fair value gaps are telling you a story. Because if we were to continue higher right there, then this fair value gap would likely get respected based on the sweep versus the run theory that we just talked about. If we had an ST going lower right there, and we had a huge retracement rebalancing that full fair value gap, then I would argue, well, I think we might even be going lower instead of going higher. So again, how can we define that? When we are close to the drawn liquidity and we already had a huge expansion higher, I would not expect price to make a big retracement lower into an overlapping PD rate to then continue higher. I would only demand off of price to come into that first fair value gap and then continue higher. Can you see the difference between this right there and the difference between this? We had an ST going lower right there. Once we have this ST going lower, that already tells me that we are likely heading towards those lows right there. So again, the fair value gaps are telling me a story. Now, in another episode, I will touch on a more mechanical manner of how you can know that we only sting into one fair value gap and are not coming into an overlapping PD rate. But in order for us to go over that mechanical manner, I first need to go over a different aspect that is required for you to learn that mechanical manner. If you understand how the fair value gaps are telling you a story, then you need to try trading ES, because ES is an absolute beauty. Now, again, this works on every market, but ES is so beautiful, believe me. After sweeping that low, again, how can we know it was a sweep? What is forming right there? What did we touch on in the previous episode? An ST. Can you see now why this was a perfect entry as well? Because there formed an ST right there, and we were already disrespecting that fair value gap and not continuing lower off of that fair value gap with the overlapping low that we just traded below. Now, this is actually a part that I mentioned in the Discord in the mentorship. When we went above this high right there, and we respected that fair value gap. So we traded into that fair value gap and respect that high as well, because we were immediately continuing higher off of this fair value gap overlapping with the high that we just went above. Then this move right there, this move already told me that we are now heading towards the next drawn liquidity, which was those highs right there. Again, can you see the difference? Sweep, run, run, respect fair value gap overlapping with the high, sweep, disrespect fair value gap overlapping with the low, and ST model forms. And if you follow along with ES, what happens right there? We come above this high, that drawn liquidity. And what happens afterwards? We create some kind of first ST, but what happens? Again, that fair value gap with what? Overlapping that high. The same process over and over and over. Now, why didn't we respect this fair value gap right there? And this is where the part comes in that we just talked about. When I expect a sting, we haven't taken the drawn liquidity just yet. And we are close to the drawn liquidity, just like you saw here. Close to the drawn liquidity, only a sting, and we move higher. Right there, we have taken the drawn liquidity. So again, you can define it. We've taken the drawn liquidity, so overlapping PD array. What is the first overlapping PD array? That fair value gap with that high, which is a mitigation block with that fair value gap. That is exactly what you want to look for. That is how you can build on the idea of the fair value gaps are telling you a story. But they are whispering, and you need to listen very closely to what they're telling you. And with those guidelines, for example, a sting, we have momentum, drawn liquidity hasn't been taken yet. We are close to it though. All right, we only expect a sting. I wouldn't want a big retracement. After taking the drawn liquidity, are we sweeping or are we running that liquidity? That is exactly being told by the fair value gaps as well that are overlapping with that PD array. And the PD array is that high or that low that we just went above or below. And the same thing happens over and over and over. Now, please don't just listen to me and binge watch these videos. Please do some studying on your end and you will be absolutely mind blown on the material that we are teaching here. Because you know what they say. Once you see it, you can't unsee it. Define it? Well, with it, I would define all the concepts that I'm teaching here. And you can see how this is in perfect harmony with your ST model. If you found this interesting, I would highly suggest you to go to ario.io, sign up for the newsletter right there. It's completely free. Every week I send out new emails with new information. If you haven't watched the ST model just yet, or if you have watched it, I would highly suggest you to watch it again and see how it is in perfect harmony with this video right here. All right, perfect. Thank you.